Good morning, traders. It's Friday, June 16th. My name is Charles. Welcome to the Pirate Traders live stream. I was so busy getting pumped up to some AC/DC, getting ready to rock it out today and to make some money, that I totally lost track of time and realized the market was about to open. Okay, so what are we expecting at the open? Well, first things first, the overnight inventory is net long, meaning more of the traders are long than short. And we are opening, if we were to open at this moment, with a very tiny gap up. So the first order of business is obviously just to see, can we get above and stay above yesterday's range, right? So do we fill the gap and then do we find support? We would expect that the market might have to push a little bit into yesterday's range, looking for that support. It doesn't have to find it at the high to a tick. But any support up here would be bullish for continuation to the upside. Okay. Also, if we open with a gap and we don't even come back and test yesterday's high, if we just immediately start higher, that would also be bullish as a gap and go. So what would get me to more of a neutral state? Well, if we pulled back down into yesterday's range and then started to spend a lot of time down here and bring in a lot of volume, well, then I'd be more neutral and treating it like a chop zone inside the overnight range, and then breaking that overnight low would get me bearish for continuation lower. Okay, so they're going to start with a real gap. Looks like we have momentum right out the gate. I wanted to just start today by pointing out on the daily, we are re-entering a previous area that was very, very important for the market again and again and again. So if we look back to the previous times, this area here is very different than all the rest, okay, between these two white lines, because every time we got to this area, we immediately went from one end immediately to the other, okay? Came back up through it, immediately went through. Came back down. This time we dipped in, couldn't get to the other end, caused a breakout, did that again, okay? Then when we re-entered it again, boom, immediately straight through. Re-entered it on the other side, boom, immediately straight through. Again, boom, again, boom, again, boom. This is a balance area like one I've never seen before, where the market spends no fucking time in here and it just shoots straight through and goes to the next place it's going. Now, the last time we were here, it was a lot more choppy. We pushed up into it. We spent some time balancing. Boom. Then we got the move. We came back down. We spent some time grinding. Boom. Then we got the move. Did some more grinding. A look in that failed lower. Okay. So it's not a perfect balance area, but it is an important one and one we want to pay attention to. So why am I bringing it up? Well, yesterday we poked up into this balance area. Okay. This previous balance. We poked right up into it. And so at that point, what were we looking for? What we saw the other times, looking in and failing and then getting rejected off. But that's not what happened. What happened instead was the overnight kept us up in there, and we now opened up in that balance area. So we have now officially at this very moment re-entered previous balance, and it was not a look in and fail. That increases the odds. I know it seems insane, guys, because it's like this market can't keep going up. But that increases the odds that the next stop is the opposite end of the balance. Now, if you think I'm crazy, if you're like, Charles, that's impossible, let's look at what the market did before entering it in the past. Massive big move up, straight through. Massive big move up, straight through. Massive big move down. Massive big move down, straight through. So this is a balance area that doesn't care what happened before. It cares what happens when you get there. Do you just poke in and then fail back down? Or do you poke in, boop, and pop through? So this area is going to be very important to me this morning. And we can pretty much just call that the overnight range, right? We can pretty much just say, as long as the market finds support, okay, the gap is filled. As long as the market finds support somewhere inside this previous or this overnight range, we're inside that previous balance area, right? And only if we break the overnight low and start to head lower, am I saying to myself, okay, we're back to a look into and fail of that previous bounce area? So, okay, maybe it's one of these, right? But for that to happen, we got to get back down below the overnight low. Otherwise, I'm telling you, don't hate me for it, but the most likely move, just like every other time, is right to the opposite end. And that would mean by like Tuesday, Wednesday of next week, we're at 45.50. I know it seems insane. But that's what the market generated information does. It lets you know when something crazy is happening, and you should be aware. But then, of course, the other thing, the caveat is all the weakness that we've left behind with this massive move of momentum to get here. So if we do look into it and fail, if we do get down below that overnight low, well, then certainly we want to get bearish to start pulling back some of this, okay? But as long as they still have the momentum, there's no reason to fight it. And that's just one more reason to assume they still have the momentum. All right, so we are looking for support here. Right now we're getting it at yesterday's high. We're looking for it pretty much anywhere above, let's say, 44.79 for continuation higher. And below there, we'll look for chop. It's a bull market, you know. If you have not yet, I sure would appreciate it if you could smash that thumbs up button. That like makes a big difference. I know it's just one little push for you, but it's a huge push for the algorithm to send new people my way. So I sure would appreciate that support. All right, we're back down into yesterday's range. So obviously still bullish, still has momentum, but the more time and the more volume we bring in inside yesterday's range, the less momentum we have. So we're looking for it to just poke in and bounce right back out. We got 95 brave souls hanging out. Welcome one, welcome all. 37 likes. Lema says, hey, have fun today. It's Friday. Yeah, I know. 'Cause I'm TNT. Hey, hey, hey. Yeah, I think there's money to be made today as well. John Q says, my glass of dopamine is half empty today. Sounds like someone needs to get on their face and do 10 push-ups. Get your blood pumping. Hey, hey, hey. 'Cause I'm TNT. All right, testing the support right now. Is this enough to send us back up above yesterday's high? Or do we need to spend some time chopping around inside the overnight range? Hello, Infornity, witches and warlocks. Good morning, Andrew, John Q and John G, Gino, Frito, Felipe, $6 million man, Pavel, Darth Liquidity, Holger, Mike, RK George, and Lamus. Welcome. Good morning, Will, RL. Will's real life. Infornity says it's Quad Witchening Day. Oh, God, say it isn't so. Is it? Thank you for the heads up. Oh, man. Well, you know what that means. Quad Witchening means it's going to be a tricky day. Generally, those tend to be much more consolidated, choppy type of days. And always an opportunity for some random thing that makes no sense at some point throughout the day. It's a witchening. Okay. Scott says market makers want to push low today for Max Payne. Yeah. I that's not my expertise. I wouldn't know. I just know because a lot of people are rolling over positions. They're exiting one trade and entering the same trade on a different contract. They just don't like the market moving around a lot. So we tend to have more kind of muted, tight range days. It can still go somewhere. Like if it's going up or down, it can still go. It'll just be a very choppy trip. Scott says, hopefully the market is exhausted enough to be pushed around. Well, we'll have to wait and see. Like I said, for me, a morning like this is just a beautiful thing. They can't make it any easier, right? We've had an insane amount of momentum. And at market open this morning, the market says we've still got momentum. So all you got to do is just go with the momentum until it breaks. And this overnight low is a perfect level to note that momentum breaking. You got 45 degrees. That's good, strong support. And you got that look into and fail of that balance area I talked about. So whether we go slow grind chop and then break, or we go slow grind chop all day, or we randomly break the low and liquidate, no matter what happens, I'll see it coming. And I'll know what to do. VIX probably is my guess. Okay, so that support is not holding, which means we got to spend some time chopping around inside this overnight range. So like I just said, this low, this 45-degree angle increases the odds that this is good, strong support. So what does that mean? It means as they poke into it, they will keep getting punched back out. Boop. Nope. They'll keep trying and they'll keep getting punched back up. So that increases the odds. We're about to chop now. As long as we are above that overnight low and below yesterday's high, it's going to be impossible to read. Just be some sideways chop. But whichever we break, if we break above yesterday's high, we start to find some support, we can get bullish. And if we break below the overnight low and get some resistance, we can get bearish. So the chop might be a little annoying here, but it will set us up for whatever comes next. I'll take it. Chop zone. Got 106 people hanging out. Only half of you, a mere 50%, have pushed that thumbs up button. Come on, guys. I'm here. I'm sharing my insights. I'm doing it for free. All I'm looking for is a little love on that like button. Design knob. Pappy. What's up, dude? No Pappy here. Chop zone here. George, can we take a look at the Q? Yeah, we can. I just drew the chop zone on the ES. Thanks so much. But yeah, let's take a look at the Q. Okay, so exact same thing for the NQ as the ES. It's been that way recently. The two have been kind of doing the thing together. So it's still, higher highs, higher lows. Value is higher, so you have continuation of the momentum to the upside. It looks like you also did open with a gap on the Q as well. So same exact thing as the ES. You're looking to turn these lows here in the overnight into support, literally right now. And start chopping around inside the overnight range. As always with a chop zone, you're looking for what happens at the support and then what happens at the halfback, which is currently around 15,408. So just kind of, does it get resistance? Does it get support? Does it get resistance? Back and forth. If you get below the overnight low, so if you get below 15,315, then you start to get bearish, right? If it pokes below there and it brings in new sellers and they start spending time below that overnight low, it increases the odds they need to pull back and repair weakness that way. So you would just start monitoring for continuation lower from that overnight low. But don't get bearish yet. That 45-degree angle is very strong support. The odds of chop are very high. So if they're going to break lower, they will poke below and spend some time building up resistance. That's your opportunity to short. Before then, just assume chop. Because it's a chop zone. And they like to just chop it up. Design Nub says the deer are coming. Pew, pew, pew. I don't know, man. NQ's got a pretty strong channel there. It would appear Pappy could be out of town for the long weekend. Took off early. We'll know with what happens with that overnight low. Lema says, what is a possible resistance zone on the ES to go short if it retraces back? So inside the chop zone, basically, anything up here could be resistance. Anything down here could be support. The thing that makes it a chop zone, the reason I have this specific criteria, this specific category, is because it's impossible to know where to short. It's impossible to know where to go long. So I could tell you, yeah, go short right here. Go short at the halfback. That's a good spot to go short. Okay. But what happens if you go short there? And then it grinds down to right here, and then it comes back up through your trade? Are you going to have known to take profit right there? Are you going to let it go past and become a loser? Are you going to get stopped out at break even? Is that a good strategy when you end up adding in your fees? Suddenly, when you start to come up with a consistently tradable, where day in and day out, you see this thing happen and you can make money off of it again and again and again. When you look for those inside a chop zone, it's really, really hard. Unless you're a scalper, unless you literally jump in to grab a 2-point move and then you jump out and you have a system for that, it's very, very hard. So I just don't try to short it anywhere or long it anywhere. I just sit back, relax, and let them do that. Let them drive each other mad, pushing it up and pushing it down and pushing it up and pushing it down. And oh my God, oh my God, oh my God. Oh, it's going to break lower. It's going to break higher. Crash and burn to the moon. Crash and burn to the moon. And then whenever they're done, whenever they've exhausted themselves, done all the chopping they're going to do, then they'll break out of that chop zone, either above or below, and come back down and test it for support or resistance. Now, at that moment, I have an opportunity, right? If they poke above and they come back down and they find support, I have an opportunity to go long to make money off the momentum with a nice tight stop back inside the chop zone. Or if they pull back down and they don't find support, I got a great place to go short there as a look above and fail of that chop zone. Now I have a reason to go short. When it's in the chop zone, I don't. But a failure to break out does. Same thing to the downside. If they push below and come back up and find resistance, I can get short for that breakout with a nice tight stop. Or if they push down, come back up, and they don't find resistance, I can get long for the look below and fail of the chop zone. So I don't have a trade inside the chop zone, but I have unlimited opportunities outside of it once it breaks. And that's why I love chop. Because all it takes is the patience to wait, to just let the other participants get worked to death first. So much easier that way. Because it's a chop zone. Garrett, I don't trade TPO charts. Will a Pirate Trader subscription help me become CPI? CPT? I don't know what that means. Dude, you've been following me for a week now. Are you finding any value in what I'm doing or not? That's the question. Would you pay $10 to get this for a month or not? You decide. I'm giving it to you right now. This is what I do. I tell you what I think is happening all day or while I'm streaming. So do you want that or not? There's nothing else than that. Do you find it easier trading with someone else to give you a second opinion or not? Thank you, Lord MacGyver, Will, RL, and Percy. Appreciate you. Because it's a chop zone. George says, I saw your course on your website. Do you answer emails about your course? Sure. Shoot me an email. John Q says, can you also show NQ, MNQ, MES, ES, YM, MYM? On and on. No, I can't. The simple truth is, I could pull up all those charts for you on a daily and I could just like analyze it, do some TA and give you my best opinion. But the reality is that if you're going to one person and asking them to advise you on all those different assets, you're not getting an expert. You're not getting somebody who really understands how those assets trade and how they move. You're probably getting somebody who's very good at TA in general. But what my game is, the way I make money in the markets is not just being pretty good at TA in general. It is being an absolute expert at one asset, one market on one time frame. And so that's what I do. The ES intraday. That's my shtick. But pick your favorite from that list, and I'll look at it on the daily for you, John Q. Well, we're just chopping it up. Hit me with your questions. Anything at all. Lamus, why was my choice ES versus NQ? Just the amount of volatility. The ES has a lot more moving parts connected to it, so it has a lot less sporadic moves. Whereas the NQ it's only 100, stocks as opposed to 500, and there's a lot fewer macroeconomic instruments that are tied to it. So it just has more kind of random sporadic moves. Some traders love that. I hate that. I like a market that is as easy to read as possible, and the ES is easier to read than the NQ. But to each their own. All right, we're losing the volume here on the Bookmap, the liquidity. So that will be the news dump that Informity mentioned. Pew, 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 pew. George, what do you think about the Russell? Same thing. It's just like the Russell is not any easier to trade than the ES. Might as well trade the ES. It's the most liquid market on earth. Can trade it for the rest of my life, no matter how big I get. And I plan to get big. In position size, not body weight. Jimmy Woo. Whoa! Zing! Zap! Hey! Well, nah, but I'd hardly call it a fleet. New Ballistic, living up to his name. I'm $120 away from passing Top Step, and I'm nervous now. Well, don't be. It's a trade. It's no different than the trade you'll take after it, or after that, or after that, or after that. You're going to be taking trades just like this every day for many, many years to come. It's just another trade. Remember, Babe Ruth also set the record for the most, strikeouts. John Q. This one took me a second. I really had to process this. So you're saying there's no Dr. Phil of trading. Dr. Phil does everything? I get it. Oh, they're out there. Believe me, they're out there. What am I thinking? What's his name? Jim Cramer. How is Jim Cramer not the Dr. Phil of trading? Why did we not? They even look the same. Okay, so I'm watching half back here at 81. It's acting as resistance. So the question is, can we poke through it, or does it smack the market back down? Smacking the market back down means more chop. But if we can get through it, we can try to break back above yesterday's high. If not, more chop. That's true. Design Knob, you've been gone so long. You didn't know the deer with the T-Rex arms and the machine guns on their head are now cocaine deers. We're all caught up. GT says, I am learning the art of sitting on hands from you. My pleasure, man. That's 90% of trading. I don't know how else I can convince people of this. I swear to you, it's 5% buying, 5% selling, 90% waiting. And the cool thing is, when the waiting becomes easy, when the waiting just becomes natural, you're like, oh, here we go. We're in a chop zone. I'm going to have to wait. And you don't have to force it anymore. Then when those opportunities come, you are clear-minded, you are ready, you are focused. This is the way. All right, so can we poke through the halfback now? If so, we can head up and test yesterday's high to see if we can get above there. GT, catching myself looking for a trade? Yep, I get it. But just say to yourself, would you have wanted to take that trade 3 minutes ago or 6 minutes ago or 10 minutes ago? You won't want to take it in 3 minutes or 6 minutes or 10 minutes. Not until we break out. All right, so we're through the halfback. That's a little tiny bit bullish. Can we get up above 86? Can we get above yesterday's high? Hello, Scooball. $127 awesome people hanging out, but only 83 willing to give me that thumbs up. What's it going to take, other 50 of you, to get a like on the stream? NQ finding support on that 20 moving average. So if, again, this, I'm talking now future tense, if the market starts to move higher, you could now expect when it pulls back down, it will work as support the next time, and so on and so forth. But obviously don't make that assumption yet. You're still just kind of grinding. But if you can break higher when you come back down, that should now hold. Internals look pretty neutral here. No one's showing any, giving anything away yet. Okay, so obviously in a when what should happens doesn't, like I said, getting through that halfback would have been the thing we needed to get above yesterday's high. The fact that it didn't work means we're not going above yesterday's high. The chop will continue as they just chop it up. Wow, wow, wow. Informity says, if I understand your approach, your trade positions are indifferent towards risk reward for positioning. As a trend trader, your system rewards you for following trend at bad positions to take larger moves. I believe this can be dangerous for amateur traders who do not yet have good risk management policies. I disagree. You're missing the point. You're confusing the two, right? So if I wait to get into a trend trade, so let's say I think the market is going to go, and again, I'm not giving you a trade idea here. This is just a theoretical. Let's say I think the market is going to go to the opposite end of balance. So I think we're going up to 45.60, right? And I'm looking to get into a long trade to get to 45.60. Okay? So the market opens. I see it as a chop zone. Let's say it pushes above the overnight high, and I put in an order at 44.87 with a stop just below the halfback at 44.80. Okay? Market comes back down, fills my order, support, 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 and it continues going. Okay, so in a move where the market is opening here and going up to 60, right? Waiting for this chop to finish, watching it push up, come back down, buy in support with very little risk to be in the trade to make that larger move, that is perfect execution. That is the very best place to be getting long. That is excellent risk to reward. And all it takes is two things. One, I have to have the perspective to know I'm trading to get to the opposite end of balance. The thing that every other trader in the world right now thinks is impossible. The thing every other trader in the world can't see from a mile away because they don't trade balance areas like I do. They don't have the talent that I have. They don't have the experience. So I have an edge over them because I can get in a trade here and stay in it until it gets all the way to here or however far it gets before the market closes on the day that I entered it. Okay? So what happens to you, I'm guessing, is that you get into a trade here and then you get stopped out and then the market goes without you. And you feel like it was a bad risk reward, but it wasn't. It was a great risk reward. It's just you were trading on too small of a time frame. Okay? So my system is the very best system that any new trader could use because my system basically means you're risking the very minimum amount of money you could possibly have to risk, this one tiny little bit of money, to make this huge amount of money. That's the way new traders should trade. Very little risk for very large reward. But the problem is it requires discipline. It requires discipline in waiting and not getting chopped up when there's uncertainty. It requires discipline in taking action at the moment that the market presents the opportunity, and it requires discipline in staying in the trade and not letting my psychology talk me out of it until either we've got where I was targeting or something new happens, right? Some kind of piece of information tells me we're not going to get there. So that is my strategy. And I promise you, there's no better strategy. If you are not a profitable trader, than that. Be extremely patient with your entry. Risk as minimum as you possibly can for as maximum a possible reward, and then stay in the trade and squeeze every dollar you can out of it. That's the best system. In my opinion. Travis says, how dynamic are your stops? How many points on the ES? So I've been over this a bunch, but I'll just explain it again. I don't have any set system where it's like every time I take a trade, it's 4 points of stop or something like that. Every trade is its own opportunity. What's happening in the market right now at this moment? So to answer your question of how big of a stop would I give it, you would have to tell me all those pieces of information. What's been happening over the weeks to lead up to this? What's been happening over the hours and minutes to lead up to this? What am I expecting to happen next? Is this a high volatility day, a low volatility day? Am I feeling, really strong and confident in my opinions, or am I less confident? Like, there's so many variables. The long and the short of it is, this is how I trade. Okay? This is all you need. If you're going to be as good as me one day, this is all the information you need. Wait for an opportunity to come, meaning do not jump in a trade right now because you see something happening right now. Instead, right now, think about what could happen next in the market. And if that thing is going to happen, what would happen right now to tell you that, to confirm that opinion? Once you have that opinion, okay, figure out how to enter a trade. Then just wait. Wait and wait and wait until that thing happens. Once that thing happens, do not wait at all. Without hesitation or reservation, enter the trade the second it's there. And then once you're in the trade, be as patient as you can taking profits. Don't move your stop unless it's the best time to do it. Don't get out of a trade early until it gets to your take profit. I've just given you everything you need to be successful. If you hear me say those things and you say, well, Charles, that's not enough, I can't be a profitable trader with that information, then you don't understand trading, because it is truly that simple. When I was first trying to learn how to trade, switching from crypto to regular markets, I found this group of guys in LA that had this thing called Traders Meetup, and they would meet up once a month. And somebody would do like a little lecture on a certain subject matter. And then everybody would hang out and like have a meet and greet afterward and shoot the shit. And it was really beneficial for me because I was trying to break into the industry, not knowing anyone. And here were all these guys who'd spent years working on Wall Street. And now they were like just retired and trading for fun. And they would meet up and talk about stuff. And so one of these times, one of these guys gives a presentation. He's a ES trader who uses VWAP. He's a reversion to the mean trader. And his presentation was amazing to me. And I was like, that is so interesting. That is so cool. I really understand that. So I went up to him afterward and I said, listen, I'm trying to learn to trade markets the way you do. Is there any book you can recommend to me? Like I could just read this book and then I'll have a better understanding of understanding markets like you do. And he said to me, get the book Reminiscence of a Stock Operator. Okay. That's all you need. Everything you could possibly ever need to know about being a trader is in that one book, Reminiscence of a Stock Operator. So I was like, sweet. I was so excited. I like literally went and got in my car, pulled out my phone, downloaded it on audiobook right then and there, and started listening to it on the way home. And I listened to this whole book, and it's an amazing book. It's this story of this trader in the early 1900s who's this genius, and he gives all these great insights about why he's successful and what makes him different from other people. And I just thought it was a wonderful book. But at the end of it, I was like, I didn't learn anything. Like, this doesn't teach you how to trade. It's just a story of a trader. That's all this is. It's like, this guy didn't give me a good book. And I felt a little bit like, fooled. Well, lo and behold, years and years go by. I learned to trade the hard way, making mistakes, losing money again and again. And I have to seek out guru after guru and learn system after system. And I finally get through the whole thing. It's years later. I've got the brigade and I decide I want to create an activity for members of the brigade to be more communal with one another. So I start a book club, right? What's the first book I choose for the book club? Why not Reminiscence of a Stock Operator? That was one of the first books on trading I ever read. Seems like a good one to start off with. This was probably, 6 months ago, something like that. Maybe a little more. And so I went back and reread Reminiscence of a Stock Operator now, after having been through the trenches, after having worked through all the pain of trading and learned from my own experience, when I reread Reminiscence of a Stock Operator, guess what my answer was? Guess what my opinion was? Holy shit, every single thing you need to know about trading is in the book Reminiscence of a Stock Operator. He explains it all exactly. Every single skill, every single habit, good and bad, everything that you need to be a successful trader is in that book. But because I didn't have any experience, I didn't have any understanding of trading, when I first read it, it was just a story to me. But when I read it the second time, I had that experience to back it up. Suddenly, all these new interesting insights came forward. So I'm telling you, Infornity, that's the difference between me and you right now. You're reading the book and you're just not seeing the information. But keep fighting, keep struggling, keep working, and it will all make sense to you one day. This is the way. All right, still can't break out of this chop zone. It's a chop zone. Armando says, Charles, yesterday we had cessation of the trend in the H period. In the I, we went on to make new highs for the day. When do you consider resuming the trend after cessation occurs? So my official definition is the second TPO on the breakout. Okay. So this will get a little market profile nerdy for those of you that don't know this. Don't let yourself get confused here. But basically, and yesterday was just one of those days. It does this sometimes. It's annoying. It happens. So you had the trend. You had the momentum. You got cessation of that trend in the H period. So I would consider the market rotational here. What does that mean? It means I'm either going to try to short it up here for rotation back down to the POC, or I'm going to wait and see what happens on a breakout. Now, obviously, I'm not getting into that short, right? I didn't just watch the market push its way all the way up here, fail to backfill some single prints, and then come right back up to the high, which is only like a few points from the POC, and get into a short trade. So I just wouldn't have been in a trade there. There would have been nothing to do. So then the market breaks out. It gets above the high. So now the question is it still rotating? Is it going to fail and pull back to the POC, or is it breaking out? Is it going to a new location? So for me, the official definition, so it's breaking out if it brings in enough volume and it finds support. I call it one time framing on the next TPO. So this would have been breaking out in the I period once they found support there. When it came back down in the J period and it made that higher low than the I period, this would have been the first TPO of the new trend from there, which obviously would have gotten cessation right at the close. And it almost looked like it was going to get one more poke too. But we did it in the overnight. Sometimes you just got to be patient. So these days do happen, right? Where the market is trending, it gets cessation and it immediately starts another trend. They do happen and they are annoying when they do, but who cares? They don't happen that often. They happen, 10% of the time or whatever. So no big deal. Do we have the buyers? Can we break out? At this moment, I still have doubt. It's choppy. Man, that 20 moving average still holding by the hair of its teeth on the NQ. Infornity says, then I would recommend more input on trade entry possibilities. The bullish bearish lines do not talk to this. I don't know what you're saying. Don't take trade ideas from me. If you're interpreting something I'm saying as a signal to you that you should get in a trade, don't. That's not how I trade. I don't trade off of the things I say. Okay? I trade off of what's happening in the market. The things I say are just me saying out loud what goes through my head in order to understand what's happening with the market. Okay? If you are looking at somebody else on YouTube and you're saying, I'm going to go long or go short because of something they are saying, stop doing that. And Infornity, I've begged you not to do that in the past. I've begged you to only trade with a paper account. So why are you losing real money? I've begged you to only trade with a paper account. You're the one that chooses to lose real money, not me. I've begged you to create your own system from scratch yourself. I've begged you. You're still trying to follow me. Stop doing that, right? Don't blame me because you won't listen when I tell you the right things to do. The right thing to do is learn how to read a market from me. Then figure out how to trade it for yourself because your psychology is different than mine. Your market understanding is different than mine, and your capital is different than mine. I don't know how many times I have to keep saying that specifically to you. Stop trading with real money and learn how to trade first. You'll never feel pain if you're trading with a paper account. It's only because you keep throwing your money away, making the same mistakes again and again, that you're feeling this pain. Stop doing that, please. All right, finally broke the initial balance to the downside. So that is a little tiny eensy weensy bit bearish to see. However, we remember that we are still in a chop zone. As long as we are inside this overnight range, the higher probability is that the market will find support and head right back up and continue to chop. So I would need to see the market push below 44.60 and get resistance down there to get bearish. But now the odds are slightly higher that that's what will happen since we broke to the downside. Alrighty then. Well, I think I've taken about all the torture I can take for one day. I was hoping we were going to at least try to break out of this chop zone so that I could look for a look below and fail opportunity or a look above and fail opportunity. But it seems the market is dead set on going nowhere all day long. So I do think at some point today, there'll be some sort of either short covering or liquidation that will break out of this chop zone. Remember, the chop zone is between the overnight low and yesterday's high. Okay, so at some point today, there should be some sort of liquidation or short covering that will pop us above or poke us below. Once that happens, there's an opportunity for a trade, right? If they fail and they come back up, you can get in the long there. If they get resistance, you can get short there or vice versa. Okay. But in between yesterday's high and the overnight low, it is just going to be more of what we've had so far. More of just constant up and down grind. Which makes sense, right? We talked about it at the market open. If there's a triple witching or quadruple witching, then generally they like to keep the market in a tight range. It just makes it easier to price those options when they're rolling them over. Whereas if there's a day with a lot of volatility, it's much harder to figure out how much it's going to cost you to accumulate your next position. So I have a feeling they're going to keep this going the rest of the day. And even if they do break one way or the other, they'll likely just bring it right back in. And we'll close somewhere around the POC, somewhere around yesterday's close, I bet. So for that, I say farewell. Disappointing, being that it's a 3-day weekend, so now we got nothing till Tuesday. Nothing to do for 4 whole days. All right, guys. Have a good weekend. We will see you Tuesday morning. Bye.